This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Messer and Tim Stenevec from Bloomberg Radio.
And now to the other stock that's on our radar today. Macy's, higher after the company said a $21 per share takeover offer from Arkhouse Management, and Brigade Capital Management lacks, quote, compelling value. Arkhouse CEO and managing partner Gabriel Kahan on Bloomberg TV a little earlier saying he is hopeful that it can increase Macy's offer and that it has close to 50% of equity to close the Macy's deal.
All right, so let's get to it. As we said, Macy's up about 2.6% in the trade, off its highs of the session, but still trending higher. We've got with us Bloomberg Intelligence Senior Retail Analyst Mary Ross Gilbert. She's joining us from our LA bureau. All right, Mary, what do we need to know here? Macy's has got to feel good that it got an offer, but they're not very happy with it. Is it just they're not happy at this price? Or I don't know. How are you thinking about it and how are you analyzing it?
Yeah, so one of the things that we've done when we've looked at the department stores is we took the time to value the real estate. And so for Macy's, we valued the real estate at $8 billion. So when you look at this transaction, and this transaction, it's the $21 per share, that actually works out to a total enterprise value of about $8 billion. So it's basically saying that they're going to get the retail business for free. So that's how we look at it. But it's also a little more complex when you think about how do we extract the value from that real estate. And this was something that was explored in the past by previous investors. For example, Starboard back in 2016 had proposed taking Macy's real estate and spinning it into another entity. And at that time, they were saying, hey, maybe the stock is worth something like $60 a share. And at that time, Macy's stock was trading around $40. In this instance, you have Arkhouse who's saying, yeah, we might raise our bid.
Right.
Macy's is very constructive here. And, they've obviously brought in all their advisors, which included real estate advisors, and they looked at it very closely. And I think that, they need to see something more serious.
Hey, Mary, when I hear about a takeover and spinning off real estate, I think of Eddie Lampert and Kmart and Sears and all that good stuff, which did not work out well.
I was going to say, how did that go?
Not so well. Apples to apples, apples to oranges. We shouldn't even be thinking that here.
No, that was a total disaster.
Okay.
That's yeah, fair. No, and look, if you look at the different investors that have targeted real estate, so for example, more recently you had Franchise Group, which made an offer, and they do have a portfolio of companies, and they're retail oriented. So when they went after Kohl's, yes, there's the real estate value, but they were also interested in the retail concept and the potential there. And they, of course, had a serious bid, and then Kohl's rejected it. And now the stock's down about 60% since that time.
Hey, Mary, JP Morgan Analyst put a 50-50 odds on this deal actually happening. What are your odds? Do you think it's going to happen?
I don't see it, not at the current proposal, absolutely not. First of all, I think it's low. And second of all, it doesn't sound like we have definitive financing. When you go through how it was going to be structured, they were talking about 25% equity. Arkhouse, in that interview you referred to earlier, said, no, it's really going to be 50%. But there must be some sort of nuance on how they're classifying what constitutes equity to get to that 50%. If Macy's is saying, no, it was really 25%, and then how real is the financing, and what would that structure really look like?
So Mary, outgoing and longtime CEO of Macy's, Jeff Gannett, putting out a statement on Sunday, says Macy's continues to be open to opportunities that are in the best interest of the company and all our shareholders. So I don't know, what are the opportunities that you think are most likely for Macy's going forward? And we just got about 40 seconds left here.
Yeah, so obviously the management team has to continue to execute on their plan, and they've really done a great job, I think, really improving the overall execution of the business, but there's more to go, and I think they're just really challenged with the mall platform that they have and the department store structure itself. And I think some of the ideas that they have could work, but it's just going to take a long time to get there. from what we can tell. And I think that Tony Spring, the incoming CEO, is really going to up the game. But we'll learn more, what that involves. We already had the layoffs announced. That makes sense. You need to streamline, especially when revenues are lower as they were in 2023. But, could they get a bid from someone else? That's always possible.
Yeah, it's really interesting. All right, and I should point out Macy's shares, while they're up today, they're down almost 10% so far here in 2024. Bloomberg Intelligence Senior Retail Analyst Mary Ross Gilbert, thank you so much. Really appreciate you weighing in on this Monday. She, of course, joining us from our LA bureau.
She mentioned the layoffs, 3.5% of its workforce. That was announced last week.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
We do have a headline crossing the Bloomberg terminal. The Fed Inspector General issuing its report on two former members of the Federal Reserve System. And we're talking about Boston Fed Chief Eric Rosengren and also Dallas President Robert Kaplan. Remember, they stepped down in September of 2021. So we're getting that report crossing. Having said that, let's bring in Bloomberg's Mike McKee, because he's also seeing these headlines as they cross.
Well, I've just been reading the report, and according to the Inspector General, with regard to Mr. Kaplan, he says, we did not find that his trading activities violated laws, rules, regulations, or policies related to trading activities. His 2020 Form A Federal Reserve Bank Confidential Financial Disclosure Report did not publicly disclose the specific dates of his trading activities, nor did it specify transactions that involved the selling of stock option contracts. And that lack of information, in the Inspector General's opinion, did not support public confidence in the impartiality and integrity of the policymakers. As far as Eric Rosengren, the Inspector General found that he did not report multiple trades on his 2020 Form A. Additionally, they found multiple discrepancies between the transactions reflected in his brokerage statements and trading data and what he reported on that Form A. Moreover, in the Inspector General's opinion, they say, Mr. Rosengren's trading activities in real estate investment trusts during a time of financial market volatility that prompted the Federal Reserve to authorize the purchase of agency mortgage-backed securities created a, quote, appearance of a conflict of interest that could cause a reasonable person to question Mr. Rosengren's impartiality under the Federal Reserve Board's Code of Conduct. They go on to say that the rules in effect at the time did not sufficiently support confidence in the impartiality and integrity of the policymakers. Those rules have been changed.
So net, Mike, I know this is just your first reaction, but was it a conflict of interest or merely an appearance of a conflict of interest? What's the report say?
It's hard to say exactly with regard to Eric Rosengren, because it sounds like there may have been a conflict of interest, but the Inspector General does not highlight the fact that there is one, but it could appear that way. In Kaplan's case, there wasn't a conflict of interest, and he didn't violate the rules, but the fact that he didn't completely dot every I and cross every T suggests that it could have had an impact on how people think about the Fed. And that's kind of what this report, I think, is going to be saying when you read it all. It's 24 pages. I'll get to it. but basically,
not if we can help it.
Basically, it's a question of, can you trust the Fed? And that this seems to sort of say there were problems.
Well, and we have a great voice on this. Former New York Fed President Bill Dudley is with us. He's also, of course, a Bloomberg Opinion columnist. Bill is joining us on Zoom in New York. Bill, so great to have you here across our Bloomberg platforms. Can we trust the Fed based on what the Inspector General, the report that they just released? Do you feel confident about the U.S. Central Bank?
Yes, I do. I think the change in procedures as far as reporting and trading, what you're allowed to do from a trading perspective, that's been tightened up considerably in light of what happened. And I think that the regime today is, far better than what we had before.
Bill, how damaging overall over the last couple of years was this to the Federal Reserve, or at least the appearance of the Federal Reserve?
Well, I mean, any thing that caused them to question the impartiality of the Fed, or the idea that the Fed was somehow, people were trading on information that wasn't public. Obviously that's terrible. The good thing is it sounds like this report, which I haven't had a chance yet to read, sounds like that there were no actual violations of rules and regulations. But certainly the appearance of a conflict is a bad thing because it can undercut the credibility of the central bank.
Bill, Mike McKee here. I'm just wondering if you felt at the time, if anybody felt at the time that either President Rosengren or President Kaplan had done anything wrong. The stories we have at the time suggested there was no pressure from the Federal Reserve for them to resign, but was it the right thing for them to do?
I'm not going to opine on that. What I will opine on is that you need to have a regime in place that creates confidence in the Federal Reserve System, and that regime needs to be robust. I think the thing that's sort of remarkable about this, frankly, is how long it's taken for the Inspector General to come out with these findings. It seems to me like this was something that could have been expedited much more quickly. So I'm not really sure why this took so long to become public.
That's a fair question. I also do wonder, is it a fair question to say, or fair kind of assessment to say, this should never have happened, this should have never even been a concern or cause for worry, Bill?
Well, I think there's always, with the benefit of hindsight, everything, looks obvious. I'll give you an example. When I was the president of the New York Fed, or when I was the head of the markets group at the New York Fed, there were very few restrictions on the trading activities of people within the bank, and you couldn't do things around FOMC meetings, but people were in possession of non-public information at other times, and the regime just wasn't very robust. And so when I became president, I changed that. I put in a much tougher regime because I didn't think that the regime that we had in place was robust to. People were, behaving on their own, but you want something, you want governance and control above that.
I think the key headline here at the bottom line is that, according to the Inspector General, Rob Kaplan and Eric Rosengren did not do anything legally wrong. So it's more of an appearance of a conflict. Now, we also had issues at the same time with Jay Powell and Richard Clarida. Is that, do you think, behind the Fed now? Is this, you mentioned how long it took to get this report. Is this sort of ancient history and the Fed's moved on?
Well, I think it's ancient history in the sense that the Fed's changed all the rules. You can't do these things now that you could have done before. That's the same thing that I did when I was the president of the New York Fed. I basically said, this is a regime in place that allows too many things that could potentially happen that could create the appearance of conflict. Let's just tighten this up a lot so there's no question. There's no question, there's no risk. And I think that's what the Federal Reserve has done. So I don't think there's much risk of anything happening in the future. But, it would have been nice if you had tightened up the regime before this happened rather than after.
All right, we're going to pivot a little bit because the reason we really initially wanted to talk to you was about what the Fed does next. And we're looking at the markets where we had another record on the S&P 500. Investors continuing to embrace maybe this risk on trade on expectations, Bill, that we're going to have a pretty aggressive Fed. And they're pricing in, or it seems to be pricing in, a fair amount of Fed rate cuts this year. What are you seeing when you look at the markets, and what do you think Fed officials are thinking and seeing when they see the move up, especially on the equity side of things?
Well, I think the reason why the markets are doing well is because the probability of a soft landing has gone up. What's basically happened is the economy's continued to grow, and that's kept the labor market tight. But the tightness of the labor market is not leading to acceleration in wage inflation or an increase in ongoing prices for goods and services. So it's sort of like the best of all worlds. So we had we brought inflation down without much.
Are you saying Goldilocks? Are you saying definitely a soft landing here?
So no, not at all. So far, so good. So I don't think the story has been fully written yet, and we'll have to see where we go. It's very difficult for the Fed to generate a soft landing because you basically need growth weak enough to keep the economy from overheating, but strong enough to keep the economy out of recession. And that margin for error right now is very, very small. So I think it's really too soon to conclude that we're on this golden path. But the chances of a soft landing definitely have gone up, and that's what the market's reacting to.
A month
I think
ago,
what we're in for.
Sorry, Bill. A month ago, you wrote a column for Bloomberg Opinion that said that the pivot is a pretty big gamble and that there's a significant chance there won't be a soft landing. Would you say there's still a significant chance? Or if not, what data has come in to show you that there is a better chance of a soft landing?
Well, I think there's risk on both sides. Number one, monetary policy might not be as tight as the Fed thinks it is. And if that's the case, the economy keeps growing, the labor market stays tight, and we don't get inflation all the way back to 2%. And so the Fed Reserve, that's sort of the no landing scenario. The other scenario, of course, is that the Fed keeps monetary policy a little too tight for too long. The labor market deteriorates, and once the labor market starts to deteriorate, that usually tends to be fairly sizable rather than small. The SOM rule says every time the unemployment rate goes up by more than 0.5%, you have a full-blown recession. So, the Fed is trying to find the exactly right guide path. And, when Powell, does his press conference next week, everyone's going to ask him questions about what are you going to do in March, what are you going to do in May? And the answer is they don't know at this point, because the economic information is going to tell them whether they're on the right glide path or not. If the economy is weaker than expected, the labor market has more slack than expected, then the Federal Reserve will cut rates sooner and by more. If the economy is stronger than expected, and inflation stays a little bit higher than expected, then the Federal Reserve will keep monetary policy on hold. And relatively small differences in the growth trajectory right now are going to have pretty big implications for the interest rate path. That's why the market's very volatile. It's reacting to each piece of incoming information, because each piece of incoming information affects the probability of these three different outcomes.
Bill, we're talking a lot about politics these days with the primaries and caucuses underway. And I'm wondering, question I know the answer to, your basic answer to. If I ask you, will politics of this election year play into Fed decision making, you're going to tell me no, the Fed doesn't let that happen. But we know from the transcripts that it gets talked about. And given the fact that one of the candidates has said a lot of nasty things about the Federal Reserve, would the Fed prefer, if it knows it's going to be cutting interest rates, to do it before the September meeting to sort of stay out of the headlines of politics?
I think at the end of the day, the Federal Reserve will set monetary policy on what they think is the right formula to generate the best possible combination of full employment and price stability. The Fed can't pay attention to politics, because if they start to pay attention to politics, that politicizes the Fed and makes the Fed vulnerable to attack. This is why Chair Powell, when he's asked about fiscal policy, tax cuts, and things of that sort, he never wants to talk about any of those things, because he doesn't want the Fed involved in the political debate. And so I think the Fed will stay very apolitical. My own experience, I was at the Federal Reserve for 11 and a half years around the FOMC table. Never did politics come up as a reason to adjust monetary policy either more slowly or more quickly.
But Bill, go ahead.
I was just going to ask, did you ever feel any sort of internal pressure as a human being, thinking about what your decision might mean in the context of how voters react?
I think at the end of the day, you just have to be blind to that. I mean, I think the only way it might come up is there have been cases in the past where the election's been right after an FOMC meeting. So maybe that FOMC meeting that's a couple days before the election, maybe that's one that you take a pass on. But that only occurs every once in a while, because a lot of times the meeting happens after the election. The election's the first Tuesday in November, and the Fed has an FOMC meeting around that time. And where that FOMC meeting falls could maybe have a very, 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 very marginal effect. But I think beyond that, I think there's just nothing there, because if the Fed starts going down this path, where does it end? Then the Fed gets accused of being political. Then people start to talk about, maybe we need to rein in the Fed's independence. Fed loses independence, then it loses its ability to conduct monetary policy in a way best designed to achieve its dual mandate objectives. So it's a slippery slope. You don't want to start going down that slippery slope.
But safe to say, Donald Trump, if he is, and everything is pointing to him being the Republican presidential candidate again, if he, he's not been shy about his feelings, certainly, about the Fed and Jay Powell specifically. Should Jay Powell and Fed officials worry, though, possibly about becoming part of the campaign, whether they like it or not?
Well, it wouldn't surprise me at all if, the candidate Trump started to attack the Fed for cutting interest rates, arguing that was somehow aiding the Biden, re-election chances. So that certainly could come up. I mean, that wouldn't surprise me at all. But the Fed Reserve would be, no, we're doing what we think is appropriate to achieve our dual mandate objectives.
All right, so your best bet, and we totally get it, data dependent. We're going to move from data point to data point. Having said that, are investors' markets not being smart in not including in their thinking that the Fed could actually raise rates again? Or how do you think about that?
Well, I think the likelihood of the Fed raising rates from here is very low. And I think the reason is that Fed already thinks monetary policy is quite restrictive. So they would have to be convinced that monetary policy is not restrictive. I think if it turns out that the economy is stronger than expected, inflation's higher than expected, it's more likely they just stay at the current level for longer, as opposed to move to actually start to hike rates again. I think the bar to raising rates at this point is pretty high.
Why does it seem to you that the dot plot kind of shows that Fed officials are all over the place over the next couple of years? What kind of uncertainty does that suggest? Does it suggest that there are real camps of doves and hawks?
I think that this is just a very uncertain outlook. I mean, how many times have we had recoveries from pandemics and the economy having lots of inflation, with the Federal Reserve being very slow to tighten monetary policy? And so that's sort of the bad news. And then the good news, it seems like it's working out pretty well so far. So the Fed has caught up, economy has slowed a bit, inflation's come down. So I think, the reason why, it's just a very tricky environment. I think that, Fed officials probably disagree mostly about the economic outlook, the uncertainties about the economic outlook. I think in terms of how they would respond to the same economic outlook, I imagine the reaction function, how they would respond, probably doesn't vary as much. So, but I think it's mostly uncertainty about the economic outlook.
Hey, Bill, just got about 1 minute left here. We're getting ready for a read on GDP here in the United States. That's later on this week. And then, of course, the Fed meeting next week. What do you think is the smart conversation, smart thought, or smart metric that you think investors should be watching ahead of all of that to kind of figure out where we go from here?
Well, I think the GDP news is sort of old news. It's like describing what happened in the fourth quarter, and that's really not really that important from the Fed's perspective. It's really where are we going from here. Right. So I don't think the GDP news is going to be very, very important in terms of influencing the Fed. I think what's really going to be important is, number one, what happens to the labor market, what's happening to payroll employment, what's happening to the unemployment rate, what's happening to wages, and number two, what's happening to inflation. Is the final mile on inflation actually going to be harder or not so hard? That's really the question on the table.
All right. Well, Bill Dudley, so appreciate your time on this Monday with the breaking news, and then, of course, getting your outlook and thoughts on the U.S. Central Bank. Bill Dudley, of course, former president of the New York Fed, Bloomberg opinion columnist, and, of course, our Michael McKee, who covers the Fed and everything going on with interest rates. Bill, by the way, will be part of the Bloomberg Radio and TV special on the Fed Decides. That's on Wednesday, January 31st. That starts at 1:30 p.m. Wall Street time.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Investors not so keen on the cannabis sector last year. The advisor shares pure U.S. cannabis ETF little changed in 2023 after dropping 73% in 2022. This year, however, as a whole, Tim, the group is up about 20% as measured by that ETF.
We have seen the group pop this year as investors seem optimistic about a possible reclassification and potential regulatory changes that could benefit the cannabis industry after the Department of Health and Human Services released some 252 pages of documents asking the DEA and to ease its position on cannabis. We're talking, of course, about the Drug Enforcement Agency. Right. This, according to Bloomberg News, over the summer.
Yeah, a lot of pages. What's key, and for the first time, the HHS recommending that the DEA reschedule cannabis from Schedule 1 to Schedule 3. It gets a little wonky under the Controlled Substances Act, but it's significant. To do this, HHS had to find that cannabis had acceptable medical uses and a relatively low potential for abuse and dependence. Many people reporting, the Wall Street Journal kind of noting this out specifically as to why this is so significant.
Yeah, net, the HHS recommending sweeping changes to federal marijuana laws, and yet we've seen this industry high before. And then societal norms and politics have their say. Politics a big part of this.
Absolutely. So let's get more on the industry. We welcome back Boris Jordan. He's executive chairman at Curaleaf, here with us in our Bloomberg Interactive Broker studio. Curaleaf shares, by the way, they're up about 17% year to date after 3 down years, with the stock losing more than 70% since a high on February 10th, 2021. We know it's been tough going, but much different tone this weekend, this year, I should say. Boris, first of all, Happy New Year. Good to have you back in the studio.
Great to be back in the studio.
You walked in, this is the first time since COVID COVID, right?
Yeah, first time since COVID back in a studio.
All right, talk to us about the mood this year. We got a little wonky in terms of what is going on with regulators, the DEA and HHS, but this is significant potentially.
This is literally a game changer. I think that in many ways, if you read it, and I actually spent a couple of days reading 250 pages, and the thing that I took out of it the most is this was largely an apology, almost by the federal government, about cannabis.
What do you mean by that?
For the last 50 years? Well, because if you look back at it, when they scheduled cannabis to Schedule 1, there was a tremendous amount of papers written on how awful it was, how terrible it was for your health, that there were no medical benefits, that this was the root of all evil. And if you think about it, today, not even drugs like cocaine or fentanyl are Schedule 1, right? Things that actually kill people. I mean, alcohol isn't even scheduled, which has a lot worse effects on the human body than cannabis does.
So it's basically a classification, right, of these
It's a classification, and I think in many ways they're also, not only are they following the people in the country, the fact that 80% of the country now has access to either medical or recreational cannabis and is frankly using it, but also you have major countries like Canada and Germany. Germany on the 22nd of February is going to be voting to take cannabis off their narcotics list, not rescheduling from Schedule 1 to Schedule 3, but taking it off completely. So you have major countries around the world that are starting to recognize the medical benefits of cannabis and are taking it off the list.
Is Germany's approach the right approach in your opinion?
I personally think, every country has its own approach. I think for Germany, they have decided that that's the right approach. They want to take it off. And what that allows them to do in Germany, at least, is that all doctors will now be able to prescribe cannabis. And more importantly, today in Germany, under their current law, you have to try other drugs before you can try cannabis. So now that won't be the case. You can go use cannabis as a primary drug, and you can have any doctor prescribe it under the new legislation.
So what about the timing for the potential DEA rescheduling of marijuana? Boris, how are you thinking about it in terms of timing? Do you have any clarity on that? Because I'm reading upbeat stuff, but they're also saying slow it down, everybody.
Yeah, I think what you said in your introduction was right. I think this is very political now. We are going into political season. This is something, particularly with the Democratic Party, to get out the younger vote. The younger vote is very much pro-cannabis. We all know they're using a lot more cannabis than they are alcohol. Alcohol sales in all states where cannabis is now legal are down, 10 to 15%. So this is a real vote getter potentially. And so I think this is going to be tied to politics. If that's the case, if we're right on that, then the latest they can really come out with this is mid-April. And the reason for that is you have to have a 60-day comment period after the recommendation,
right? And
then you have to have 60-day legislative period. 60-day legislative under our calculations is about 3 months before it can become active. And so that means if they want it active before the election, if this is really political in nature, then they really the latest they can do this is really April. However, if it's not political, then they can take it out 9 years. I mean, we've seen that before too.
Which one do you think they'll do?
I personally think that they wouldn't do all of this if this was going to be, a 9-year thing. I think that they are going to probably make the recommendation to reschedule sometime in the next 3 months.
All right. So if that happens, what does it mean for Curaleaf specifically? What's the all of a sudden?
For Curaleaf, it's an absolute game changer for a variety of reasons. For instance, on 2024 numbers, we would pay an extra $200 million cash in taxes to the federal government over and above our normal corporate tax rate, which would be equal to everybody else's. So largely the cannabis industry, and one of the reasons that these stocks have been down is people have realized that the cannabis industry is working for the federal government. Anything we make gets paid out in taxes to the federal government. So we can virtually not produce positive numbers on the bottom line.
So explain that.
Because our effective tax rate is over 70%. And the reason for that is we cannot write off any expenses, which is, by the way, really bad for benefits for employees. Anything we try to do for employees is we can't have IRAs, we can't do anything because of this tax system. And so, today we can't write off any expenses. So that brings us to an effective tax rate of 70+% is what we're paying.
How do you run a business like that, if that's the case?
That shows you how well these companies are actually run. The fact that they can actually survive in an atmosphere where we're paying 70+% taxes.
Okay, beyond the tax benefits, which I know you've talked about in the past and have been well documented, how do you pivot your business into new areas? Do you start selling things differently? Do you start doing things differently, unrelated to taxes?
So a lot will depend, and this is the big unknown, a lot will depend on what the DOJ says after this rescheduling. So we're expecting a DOJ memo. The code word for it is called the Garland memo. That's going to come out very similar to the Cole memo under Obama, which will then describe what they mean by this rescheduling. Like, what are the rules going to be in the marketplace? And there's a lot of unknowns because at the moment the states control the regulation of cannabis, right? It's still federally legal. Rescheduling doesn't make it federally legal. It just reschedules from Schedule 1 to Schedule 3. So now we need to see what is the DOJ going to say on the back of that. We also have safer banking that's going through Congress right now. It's now in joint committee. Many people don't realize that.
My entire career has been.
I was just going to say.
Right, but it's
Tim,
been
how
a
many
big.
kids have you had since we've been talking about this?
It's literally. I've been looking at this for 10 years. I'm just as frustrated. But I will tell you what I learned last Friday. This is absolutely in joint committee between the Senate and the House. That's never happened before since the beginning. They are now negotiating aspects of that bill, and they're looking to bring it in March. I believe that's also part of the coordination.
So you're not worried about November elections in terms of how that plays out and could affect this, because you think a lot of it's going to be done prior to that?
I think they're going to try to get a lot of it done prior to that. I mean, we have two candidates right now that are front runners that are both anti-cannabis. Let's be honest, both Trump and Biden are not necessarily pro-cannabis. And so a lot of this that's happening today is happening by the Biden campaign and by pressure because of the political situation. Even against all the lobbying by pharma and interest groups that are against cannabis, this thing is really starting to gain traction.
So tell us a little bit about your business and what people are buying. Are we moving beyond flower and buds? Are we moving into vaping? What are you selling the most of right now?
I have to say the industry has really matured. If you take a look, and it's different in the U.S. and Europe. Curaleaf is the only company that's got U.S. company that has a very substantial presence in Europe. We're selling cannabis in 4 different countries in Europe. And in Europe, it's very medical. It's almost pharmaceutical in nature.
Right.
So we're selling a lot of formulated pills. We're selling a lot of products, but also flower. And flower is very popular with doctors in Europe as well. In the United States, there's a much broader array of products. It's much less regulated than it is in Europe. And so we sell a whole assortment. One product that's really gaining, and I said this a year ago, is drinks. Drinks are really starting. Seltzer waters are really starting to gain iced teas with cannabinoids.
So is that where the growth is, Boris? But what is still
the growth
bulk
is
of
definitely in products, but flower is still the door opener.
The bulk of your business.
Yeah, the 50% of our business is flower, and for all cannabis company. But when I started, it was 90%.
Right.
And today it's 50. So that 40% has largely been formulated products.
So it stayed constant. Everything else has grown?
That's right.
Or that's gone down?
I think the whole industry has been expanding, so I would say that's right.
Okay.
I'm wondering about your thoughts on the rising concerns over high-potency THC products. Addiction associated with that, psychosis associated with that high potency. Is there any sort of threat when it comes from a regulatory perspective in certain states about potency caps?
So I'm going to get criticized from the industry by my comments. I'm wholly in agreement that there needs to be regulation around potency. That's my view. I mean, we run the largest company in the world in this area. We want to be the responsible company to push this. I personally think that there should be potency caps. I actually think that the THC is not the most important part of the product. I think a lot of the terpenes on these products are actually more important in terms of entourage effect than THC.
Meaning those other things are the things that make people have the feelings of being high?
Or relaxed, or working with anxiety. Like, we're doing a lot of R&D right now in cannabinoids outside of THC that are in the cannabis plant. I think that, for the most part, the evidence of addiction on THC is really anecdotal. There's no real evidence that THC is addictive.
The psychosis part, though.
But the psychosis part is a problem.
Yeah.
And so, in my personal opinion, is we need to do science, and what rescheduling will allow, by the way, that's probably the biggest benefit of rescheduling. It will allow federal dollars to finally flow into R&D around the cannabis plant. Because today, there is no federal dollars around R&D. This is going to be a game changer, because we can now openly do R&D working with the government on issues like potency.
I am curious. We've been talking a lot about elections, and I want to go back there. I know we talked a little bit about it with you already, but does the industry like one candidate over another? And let's assume that it is a repeat of the Trump-Biden matchup. Is there one candidate that the industry likes going into this
Why does
election?
everyone have that reaction when you
I'll
ask
tell you,
this
because
question?
the industry is...
Or filter right in.
The industry is just like all of us. We're Americans, and we're all tired of the political
Boris,
process.
I hate to tell you, we're just getting started.
I know.
Here in the U.S.
I know, we
but
are.
Is there one that is...
There's no question
more
that
helpful to the
historically
industry?
the Democrats have been more favorable, but for the most part through lip service, not necessarily through action. But at least on the political side, the Democrats have been more open to try and push through regulatory change on cannabis. So yes, I think the industry would err on the side of Democrats for the most part over the Republican Party.
I always like to ask about actually using the product, CEOs and executives of companies. How do you use cannabis? What products do you use?
So I'm a user every day. I use it for sleep. So I travel a lot. I've got a lot of jet lag, a lot of stress, anxiety, being in the cannabis industry and having 5 children. Definitely adds to that. I use it every single evening for sleep, and it has changed my life.
Okay, I don't want to blow up your spot or anything, but how do you travel with it?
I just put it in my necessaire and I travel with it.
Okay. Sorry for blowing up your spot.
In the United States, the worst thing that the TSA will do to you is actually have you throw it out. That's what they'll do, right? And for the most part, though, when it comes to edibles, they don't have a problem. If you're traveling with flour or something like that, they may have an issue with it. I have found that edibles are not something that they really have an issue with.
Really interesting. Very quickly, what's the one risk to all of this? Since we have been here before, we've had a lot of optimism, only to kind of have the rug pulled out from under us.
There's 2 things that I would say at risk. Is first of all, political will. Okay. Will they actually, is this again lip service for politics, but they won't take it to the finish line? Because what this industry is all about now is show me. It's about show me. I mean, if you look at Curaleaf went public in 2018 at a $4 billion market cap.
Yeah.
At that time, we were doing $70 million in revenue. We were going to do over $1.5 billion this year, and we're trading at a market cap of $3.6 billion. So we're actually down on our IPO 5 years ago, even though we've grown the business 15 times.
Wow. All right.
Right? So it's an amazing thing.
Is there any other risks, or did you get them all in?
I think that the main risk is a political one, is whether they'll do it. And 2 is, the lobbying, by the pharmaceutical industry that doesn't want to see cannabis because it is a replacement product for a lot of the pain medicines. We're doing a lot of R&D in that area in Europe. And I can tell you, we're about to launch a drug that will address pain medication out of it. We're working together with Imperial College of London on this. And it's a game changer. And that will be a big competitor to opiates.
We'll come back and talk more about that with us. And love to hear more about what's to come. Boris Jordan, thank you so much. Happy New Year. Good to have you back.
Great to be back. And it's good to be back in the studio.
And good to get to know the personal lowdown on how you use your products. He's founder and executive chairman of Curaleaf, joining us here in our Interactive Brokers studio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
TikTok, everybody. Just under 18 minutes left in today's trading session. We've got equities still higher across the board, but we're definitely off our best levels of the session. Just heard Charlie breaking it down. Our next guest, though, has something interesting to say. She always does. Tech stocks being the new defensive names, Tim.
Well, she also says you've got to zoom out. When you talk about last year's great returns, you got to look at that in the context of what happened over the last couple of years. For our drive to the close this afternoon, we're very pleased to have back with us Nancy Tengler, Chief Investment Officer at Laffer Tengler Investments, also the author of The Women's Guide to Successful Investing. She's here in the Bloomberg Interactive Brokers studio. How are you?
Good, Tim. How are you?
Welcome back.
Thank you. It's so good to be here.
Is it? It's cold, and you're used to warm places.
No,
like
I'm a native San Franciscan. So
Arizona. These are the places you like, right?
It's supposed to be cold and wet in the winter, so I'm happy to be here.
Okay, well, we're happy to have you here.
Thank you.
So tech, the new defensive.
Yeah, well, these are companies that are reliable earnings growers. Just think back in 2022, you had ServiceNow turning in 25 to 29% earnings and revenue growth, and still it sold off. Yeah. So I think you want to be able to expose yourself to companies that are going to be able to deliver earnings in a slowing economic environment. You look skeptical.
I am a little skeptical because you think of these tech companies are the ones that go lower when there's concern about high rates. There are concerns about companies with a strong dollar, and a lot of them make their like Microsoft makes so much revenue outside of the U.S. Just doesn't strike me as defensive.
Fortress balance sheets. Microsoft has doubled cash in quarter over quarter, thanks to earnings and free cash flow growth but also to higher interest rates. So these companies are actually benefiting from higher interest rates. And if you think about that old saw that when rates go high, tech goes down or growth goes down, that really is related to companies that don't have earnings.
Okay,
so
that's what I was going to say.
Discounting back.
It's like that basket of unprofitable tech companies, right?
These companies have pretty robust earnings.
Yeah, I mean, you're talking about a company like Microsoft.
So drill down. You mentioned Microsoft, Palo Alto Networks, Amazon, Broadcom, ServiceNow. I mean, these are names that you think investors should add money to, Nancy, on a pullback, or how are you thinking about it?
That's right, Carol. Okay. Yeah, I mean, they're in our 12 best ideas portfolio, which was up 41% last year. So when you take your best ideas, in my experience, and put them in its own portfolio, it's a little gutsy because we only have 12 names in there. But those are names that we have high levels of conviction on. And I think you want to just remember that since the IPO, Amazon is up 175,000%. So when was it too late to get in?
But it was questionable for a long time, and you had to be very patient. We talk about it all the time.
I mean, remember what a big deal it was when Amazon reported a profit consistently?
And I was one that missed out because I was classically trained, right? And we're like, where are the earnings? How can you value this company on nothing but revenues? And so I think you have to step back, and then there's a secondary item, which is share buybacks.
But wait, go back for a second, because you said these companies have to be making earnings, but for a long time Amazon did not. So how do you look for those outliers that you're going to have to be really patient with that might become the Amazon of tomorrow?
Because like you said, you missed out on a lot of those early gains because I was too skeptical. Avoid a company that doesn't have earnings.
Yeah, so we use relative price to sales ratio. That was something we added back in, and we look at it on our Bloomberg terminals that you guys created the charts for us. And so we have relative price to sales ratio. When the relative price to sales ratio is low, based on history and compared to the market, that's how you buy companies that don't have earnings. You want to pay
because they're selling a lot of stuff.
Yeah, you want to pay as little as possible for a future point of revenue or dollar of revenue. And typically what happens is the stock prices go up so fast that you're able to buy them for a really long period of time. And it's because it's a ratio, so it's inverse to what you might think. So we use that as a way to identify. And then if we get our secondary metric confirming, that's even better. So that was Apple in 2012, where the relative yield was super high. Remember, the yield was at 3% almost, above the 10-year back then. And we were buying it as fast as we could.
Would you ever make an ETF based on your 12 ideas?
I would love to. We have the TGLR, which it follows our equity income strategy. So we launched that about, 3 months, at the worst time, at the top of the market. And so it's now come back. We are looking at doing that, but ETFs are all about distribution. So we offer it to our clients in their portfolios, but we are looking for a partner to do just that. So great question.
How are you thinking about kind of what happens? Here we are getting ready next week for the first Fed meeting of the year. We're not really expecting anything. We had Bill Dudley on earlier talking to him, this whole idea of data dependent. But how does what the U.S. Central Bank may do, Nancy, kind of impact your strategy at this point, if at all?
It doesn't, Carol. I think we've found that the Fed has been super unreliable in messaging. They're now talking about quantitative easing, if you will, by letting securities roll off. That is a precursor, in my view, to they're going to cut sooner than they may be letting. And I hate saying this, but I think they've become political animals, and they're not terribly independent.
That's something we talked about a lot with Bill.
Yeah,
I missed that. Sorry.
That's okay. You can go back and watch it on the terminal.
You're busy too.
We have it on the terminal, Nancy. I know you're there. Well, I'll send it to you. But he was. I think he was very clear about how he answered that question, Carol. And he said,
I think so too.
The Fed, he never felt pressure when he was at the Fed. He told us, and you even pushed him on that, and he said, you said you're a human being, And he said he never felt that pressure. What gives you the indication that they're being political?
So curious story. I interviewed for a position there, totally unqualified. It was a debacle of an interview, but I got some insight into the way things operate. The first question I was asked was, have you ever said anything negative about President Trump? Now, if that's not political, I don't know what is. But if you look and I said, well, actually, I don't think in writing. So that was the end of my interview. But if you think about
next,
hey, it gives you a good story though.
If you think about how long Chairman Powell waited, there was this whole transitory business. There was no reason for that. He allowed a controlled burn to turn into a wildfire. He was waiting to get reappointed. I'm not alone in thinking that. I hate saying it, but I think it's true, and I think they'll cave again.
Cave in what sense?
I think we'll see more cutting than they're alluding to, maybe not as much as the market thinks. Well, let me put it this way, more easing. So whether it comes through the balance sheet or cutting, it's another story. But they're not going to let this continue.
All right, just got 30 seconds. We always want more time with you. But the run-up that we've seen from late last year, would it be expected to see a bit more of a breather here on the equity side of things?
I hope so,
10% worth?
Once a year, we get a 10% correction. I think that would be healthy. But remember, 2 years, the NASDAQ's actually down through the end of last year on a trailing 2-year basis. So this isn't crazy.
You got to widen out.
Yeah, and compared to the 90s, Microsoft was trading at 51 times peak earnings. It's trading at 30 times. So don't tell me this is frothy, out of controlled valuation.
All right, we're going to leave it there. Oh my God, that went too fast. Come back soon.
Thank you.
Stay warm. So appreciate it. Nancy Tengler, Chief Investment Officer at Laffer Tengler Investments. You know her new book, The Women's Guide to Successful Investing. It is out, so check it out.
Yeah, good stuff. We always love it when you join us.
I always love you guys.
I get energy.
I do listen all the time. I just been traveling today. I had to go up to Connecticut.
We love it. Well, thank you so much. Have safe travels.
All right, you are listening and watching Bloomberg Business Week.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.